What is good, NIO family? It's Rey-Jay back with another video. And in this one, I want to break down what's going on with NIO, Tesla, SPY, Nvda, the QQQ, and a couple of other tickers. I'm going to break down some very important factors affecting the market alongside NIO, which you should be watching for as time progresses. Now, we have a new catalyst that just came out. I'm going to talk about what that catalyst is, how it's going to affect NIO too. But before I break anything down, all this information, before I talk about how the market's going to move going forward, let me just mention a couple of things. I am personally not a financial planner, so take nothing I say as financial advice. And also, if you guys can, please check out the Moomoo link, which is down below and in the description. If you sign up for Moomoo, the link down below, and deposit $100 into the account, you are guaranteed up to 5 free stocks. This offer ends in just 2 weeks, so check it out before they run out. Anyways, let's break down what's going on with the market. So when it comes to the markets, NIO is currently down about 0.77% in the after hours. It's actually starting to drop a bit alongside SPY, Tesla, and the entire market because Apple ended up sinking quite a bit, or at least so far it's sinking. We're currently around the very low 170s, and Apple's continuing to fall. So we're going to be watching to see if Apple ends up rebounding or not. But for now, if Apple continues to sink, this could be a little negative for the share price. So what happened to Apple? How is this going to affect NIO and what's going on? The answer is we had some big earnings that came out. I warned you guys about this yesterday. And Apple is starting to sink a little bit. If you look at the current share price, now we're at 172 right now. We're barely testing our 200 EMA. On the 30 minutes time frame. Why is Apple sinking? Because earnings came out and they did well for earnings. First off, they beat on EPS, they beat on revenue. iPhone revenue was not bad, meeting expectations. The Mac revenue was a little bit lower than expected, but everything else was pretty close. However, unfortunately, they did not give formal guidance, but they did mention that the December quarter revenue to be similar to last year's revenue. And they actually have a little bit weaker guidance than expected because of that. So you can see right here, we have a weak outlook for the December quarter. And they're telling us that their overall sales may not be the strongest based off expectations and etc. So Apple has very high expectations because guidance is very mixed and not that strong for the December quarter. This could once again hurt their revenue a bit, leading to some selling for the stock. So it's not going to be that horrendous. Apple did not miss horribly. They actually beat on earnings. It's just that for December, things may not be the strongest for them. That's what they're telling us. And it is what it is, right? We're seeing slowdowns in economic activity that could continue in the future. We're seeing a high interest rate environment that's feeding into the margins of different companies. And don't forget that there are other things going on in China, and the list goes on with geopolitical issues. But all of these things are still affecting Apple, and there is once again potential downside coming, and this could slow the entire market down. Now, is it going to be a big crash? The answer is no. I don't think it's going to be a big crash. I think it's just going to be a very, very typical pullback that you could see during a time like this, but it's not going to be that bad. The market will eventually rebound, in my opinion. And I also want to call out that we have the unemployment numbers coming out tomorrow, an hour before the market opens. So we're going to be watching that very carefully. When it comes to news affecting the markets, the October jobs reports coming out. We'll be watching to see how that looks. We want the unemployment rate to be 3.8% tomorrow, and that's pretty much all the data. Looking at it, we also have some payrolls data, not as important. PMI coming out 30 minutes after the market opens. That's pretty much it. Just one Fed speaker in the afternoon. So the most important pieces of data will be the unemployment data and also PMI 30 minutes after the market opens. And that's pretty much it. Nothing too crazy for tomorrow. Now, this news came out a couple of days ago that NIO has signed an agreement with Bao Long Automotive, and they're trying to basically wean itself off from governmental support. That's going to be a supply deal with a local manufacturer, which is going to once again help them to gain more and more improvements when it comes to their production and help them to improve their margins. That's what they're working for, and this is going to help them supply more and more things like air springs and air tanks, which could be somewhat helpful for them. This could also possibly deliver sensors and cameras for them. So if this could help bring costs down, that could be very helpful. When it comes to other news affecting NIO, I just wanted to call out that we had 43 million in volume, not bad whatsoever. And on top of this, I just wanted to call out that Deutsche Bank is still giving NIO a buy rating. Our price-price ratio is trying to basis, NIO is trying to bounce, and we tend to be green only about 53% of the time on Fridays. But that's pretty much it when it comes to data. So what do I see for the markets, guys? Very simple. It's going to depend on Apple. Apple's continuing to fall. So because Apple's barely at 171, we're going to be watching 170 as support. If we lose it, watch 169 and then 168 as key supports. If we lose those, we could get very close to the mid 160. So like 165 or so becomes a possibility. So there is a risk of downside for Apple, and this is dragging the market down. For SPY, we have a bearish divergence, a double bearish divergence. I think is it a triple? I think it's actually a double. Sorry about this. A double bearish divergence that developed on SPY. And on top of that, we're turning a little bit more bearish on the 30 minutes time frame. I know the daily chart was looking very strong. This thing was like trying to go, but you have to remember that we bounced so hard in such a short period of time. We also have this gap down here at 422. I'm not going to worry too much about that just yet. We gapped up very nicely and just continued to go, but just be careful because there's going to be a risk of some downside. You see, SPY was at 409 and we closed at 430. We jumped 21 points in just 4 days, which is pretty crazy. Just a couple of days. We need to sell off a bit. We need a healthy pullback, and this is going to be our catalyst. Now, this is just going to be a healthy pullback. So I think that we could go down to about 428 on SPY. It's a possibility. If we lose this, you're going to be watching 426.5 and then 425. And if 425 breaks, there's a risk of us filling this gap down to 422. But if we hold 425, we could see buyers try to defend it. So we're going to be watching that very carefully, especially the 30 minutes 50 EMA. For Tesla, this is looking a little bit more bearish now. It got almost to 220, but no, historically, Tesla tends to get rejected around the 220 area. So I wouldn't be surprised if we pull back just a little bit on Tesla. We're going to be watching our key support at the 50 EMA on the 4-hour time frame at 213. So right now, Tesla's at about 215. Watch that as resistance. If we lose this, watch Tesla come down to 212 or so. And if we lose that, 209 is going to be the next level, because that's where our 200 EMA just so happens to be. If we lose the 200 EMA, it's going to come to the 205 area and potentially even lower. So there's going to be a risk of downside. However, with this bearish divergence playing out, it's no surprise that Tesla could drop a bit more. So you want to be very careful going into tomorrow, especially thanks to Aapl. It's now down 3.3%, continuing to slide. This is leading to more selling pressure for the markets. The QQQ, I'm going to talk about the QQQ, Nvda, and then NIO after that. For the QQQ, we got a nice bearish divergence. This was not a good place to be buying as of right now. It obviously has more upside potential for like the more medium term, in my opinion. But for the short term, I'm leaning more bearish now. I think we're going to cool off a bit. We pumped so hard on the QQQ in such a short duration of time. So I believe we can see this thing come down towards 359. Apple's going to drag it down most likely. It could even break below that. If we lose 357.5, not 357, sorry, 359, then we're going to come down to 357.5. If we lose that, 354.22 is likely going to come to the 200 EMA test. So there is going to be a risk of downside. I'm still anticipating that. Nvda hit a very, very key level. Basically, we have a bearish divergence. And on top of this, I noticed that we have a tendency of getting these rejections off this 438 to 440 area. And it looks like we're about to see a rejection, and Nvidia may start to downtrend a bit. So we're going to be watching this thing potentially come down to 425. If we lose it, Nvidia is going to be testing 421 very, very soon. And finally, last but not least, we're going to be talking about NIO. How is NIO looking? Honestly, guys, I hate to say this, but we're going to likely see some downside because NIO is going to be dragged by the market. Just like how NIO bounced, I was talking about a bounce coming to NIO. The market helped NIO drag up. It's also the EV sector, as we had some good news that came out. But NIO became very overbought, and it is due for a very slight correction. We could be forming like an inverse head and shoulders, even like a cup and handle. So I'm anticipating NIO to come down towards 7.64. If we lose that, watch 7.58. That's going to be our 200 EMA. And then below that, we have 7.4 around there. So I could see an inverse head and shoulders forming, but we may pull back first before this thing makes a recovery. All right, so NIO could retrace a little bit. There could be a small pullback, completely normal, nothing out of the ordinary. Watch 7.5 and then 7.4 below that. I think it's very probable it's going to do that because the 4-hour is also starting to curl. The daily doesn't show it yet. The daily is still looking strong, but it doesn't really show this rejection. The daily also has this gap. I mean, it would take us all the way down to 7.4, the full measured move. So I'm seeing potential for downside for NIO. We're going to likely come down to fill this gap and then bounce after that. I think that there's going to be a slight sell-off. It's not because of NIO. NIO did not do anything so horrible to cause this. Their deliveries were quite good, if anything. It's just Aapl dragging the market down in a very healthy manner because the market was very overbought after the very bullish move we made after Jerome Powell gave his speech. All right, so I talked about Powell yesterday. If you want more details, you can just watch yesterday's video. Basically, the Fed paused on this rate hike. They have no future plans to raise rates as of right now. And Jerome Powell said that the economy is very resilient and the Fed will be open to, maintaining their targets when it comes to getting inflation down. But for now, there's no plan to raise rates again as of right now. And we'll see if the Fed continues with that. So that's why the market pumped going into today. That helped NIO pump, but we became very overbought. So Apple's going to help the market cool off. And I think that's going to help NIO cool off too. That's it for this one, guys. I want to make this video very simple. Have a great day. And I'll see you guys tomorrow for the final video of the weekdays. All right. Thanks again, guys, and peace out.